Today I'm going to be going ahead and doing my monthly review for January. Pretty solid month this month, focusing on, a lot of things. We'll go ahead and go over them in a little bit, but overall finishing this month with a 43% win rate. And then we also had a 50%, 56% rate, which not the best month, if I'm going to be completely honest, but we did come out profitable for this month, which is nice. I'm not really comfortable sharing my P&L just yet. Um, I think that's just due to, my first couple of times uploading these videos, but over time I will go ahead and begin sharing those. But one thing I noticed for me psychologically is every time I bring up my actual P&L statement or take a look at it visually, it creates some sort of mindset shift. And I don't want that to continue to affect my trading in the next coming months until I really have built good repetition in and just have a lot more confidence in myself. So let's go ahead and get started. So for the month of January, I want to say that first half was definitely rough. We took a couple of losing streaks here. We had here one where we took four losses in a row, one win, and then another three losses in a row. And psychologically, that was definitely affecting me in a way. So, but one thing about here was within the first half of the month, I was sized down quite nicely, just trading the micros. So it wasn't eating too much at my account. And that was just due to, and the reason for me sizing down was actually because in December, I had a pretty rough month in December. Just a lot of personal things that happened in my life. And I kind of let that affect my trading. But I did do a good job towards the second half of December of just taking a break, not placing any trades at all. Maybe one or two here or there, but I was really just hands off and not focused on making any profits. I was just really focused on just getting back into the routine and taking high quality setups, really focusing on what I consider to be high quality and really just honing in on that skill. But, anyways, first half of December or January, like I said, not the best. I wasn't, one thing I did fixate on coming into the markets throughout the second week was trading after 7 o'clock. My strategy requires all of the time frame candles to close to be able to create a solid thesis as to timing the markets, knowing when the markets want to move. And I think that has been a very important part in my recent success over the last couple of weeks. Just really focusing on those candle closures to really tell a story. Because when candles close for my strategy, that means that data is solidified on all those time frames. Yeah, I like the Minecraft music. It keeps me calm. But anyways, we'll go ahead and deep dive into these individual trades. I'm gonna be more focused specifically on the ones that I took a couple lessons from because I think those are the ones where I can learn the most. And so pros and cons overview. I towards the end of the second week, I shifted my focus from executing. How do I explain this? I shifted my focus from realistically the idea of making money. I was definitely feeling that in the first couple weeks as well. I really shifted my focus from that to now executing my strategy flawlessly. So one of the main things that has really helped, like I said, is trading after seven. That has really helped. Adapting to the market conditions has also helped quite a bit as well. Just really focusing and fixating on where the market is on each time frame, just making sure that I'm not counter trending when I shouldn't be and when I should be following the trend. But most of the time I've been focusing on just following the trend, especially on the 5 and 15 minute. Because I am a scalper, I do feel like those time frames will hold more weight on my end just because that's what's happening within the next 10 to 30 minutes. I don't really care what happens in the next hour. I want to know what's gonna I don't want to know. I want to predict what's going to happen within the next 10, 15, 30 minutes and get the timing down. And so that's what I've been focused on and that's what's been helping me. So that's what I'm gonna look to apply to in the new month. Some of the cons, definitely just not taking the time this month, at least towards the first half of the month, not taking as much time as I should be preparing and creating my pre-market plan and having clarity. Focusing on clarity was such a big part in this second week of just going on a nice little win streak, but it's only been 2 weeks. I want to be able to carry this out through the rest of the month, through the rest of the months and the years. Also, focusing on just my state of being. I know in December to January, I definitely felt lost. I felt like I didn't know what I was doing. But then towards the second half, I sat down with myself and I just really focused on who did I want to, who am I working towards, right? Like, what is the state of being that I want? And it's obviously to be a profitable trader. And so I just started thinking of the things that profitable traders would do and what they wouldn't do. And I started listing out the things that I was already doing and what I wasn't doing. And just having that clarity has really helped me just focus on the stuff that I should continue doing and eliminate the habits that I shouldn't be doing. So, for example, counter trending when I shouldn't have to, not taking the setups that aren't clear to me. Like those are things that profitable trader me would not do. And just really embodying that state of being and knowing that that's who I want to be, just being a profitable trader and honing in on the habits that do make a profitable trader a profitable one has really helped as well. So that means waking up early. That means coming into the markets just with such a Zen mindset, not focused on making money, just having that idea, having that mindset of abundance. Like just really it's almost like a fake it till you make it, but having such a delusional and strong belief in myself that I am already there, that has shifted my trading. And we can just see it from here. So with that being said, I'm gonna go over the trades that throughout the first half of the week. Just taking a look at them, they don't look the clearest, direction wise. It just felt like I wasn't getting the markets correctly. So I'm gonna review over these, see what I could work on, see what needs to be fixed, and then make sure that I also identify some of the characteristics of these lessons that were presented to me in the market and apply those lessons throughout the next coming months to the year. So starting with January 2nd, it looks like I took longs. So I want to reiterate what my strategy is. One, finding direction. Two, area of interest. Three, entry model. Took longs here. What does this overall structure look like? Rangy, right? We did break this high right here. Had consolidation, broke these highs, and moved lower. Now we're trading kind of at the bottom of the range. I saw this type 3 shift, waited for price to pull back to potentially move higher. I think my ideal entry should have been right here because this is where price essentially had that retest to move higher, but then failed. But I decided to take another entry here because I honestly remember this trade. I felt some sort of FOMO for missing out on this first retest. So I thought a second retest should mean that price would continue higher. But I honestly, this right here is not clean looking setup, in my opinion. Right. So we have right now the 1 minute looking very rangy slash bearish. One thing I did remember was I emphasized quite a bit on just the 1 minute entries without aligning the time frames, which is not really the best, right? Take a look at the 5 minute here. 5 minute close type 2 bearish. Type 1 bearish. Type 1 bearish is just closing from bullish to bearish or bearish to bullish. And what I like to do on the next candle is wait for price to create a wick, because price is a push and a pull. Wait for price to create a wick on the larger time frame to essentially write that up. 5 minute was already showing bearish signs, and that's just my fault for not catching that. I did see the new 15-minute close bullish, but if we take a look at this bullish close with how strong this move to the downside was on the 15-minute after rejecting this area up here, which was essentially the larger time frame range. This 15-minute candle closed extreme, like it closed bullish, sure, but it closed under the body. It with the upper wick, it just overall was a very bearish sentiment. And we also had a previous candle closing beyond this level, which is considered a type 2 bearish. So sellers would anticipate price to pull back to continue to the downside. 30 minute. 30-minute closed bearish as well. So everything was already printing bearish. We did see a reaction out of this lower area of interest on the higher time frame, which if I had waited a little bit more patiently for this higher time frame reaction and then aligned it with the lower time frame, I'm sure there would have been an opportunity for me to scalp that, but my patience was definitely not there. And just taking a look at the 4 hour at the time before this previous candle close, we did see that price was holding at this range, and that this specific area right here should have been where I should have waited to take an entry, not above it. If we take a look at where I took my entry, price has never even tapped into this gray zone just yet. So for me, that was just more of my impatience and not being able to align what my game plan was. And that was definitely for sure to see these areas of interest have some sort of reaction and wait for higher time frame alignment. So that was the first trade. Took a small loss on that one. Traded those on the micros, and it is what it is. Here's the second trade. Second trade was taken on gold. So one thing I would say I did very well was just following this overall trend, right? We had a very nice bearish move to the downside during the pre-market session. We had the larger time frames. We had the larger time frames also breaking these lows as well. And what I was looking for was essentially a retest to continue lower. My mistake here, or the lesson here, was that once price had broken below this low, we had already had the retest and the move already that I was looking for to the downside. But because I felt some sort of FOMO again, I felt like there could be another chance to make a new leg lower, right? We did get good confirmations. However, one thing I would like to reiterate is trading after 7 is extremely important for my strategy. Waiting for those candle closes. Sure, I could have used the 1 hour 5 or I could have used that 1 hour previous candle 5 and 15 to trade, but I just found out. I just know that when I trade at that 7 o'clock, I have a higher probability of just taking better setups. And well, yeah, let's go ahead and break this down, right? So 5 minute had a very nice type 2 bearish close, but then if we take a look at the next couple candles, it's very strong buying, right? And that was something I definitely missed. We did get a type 1 close bearish, bullish bearish right here. However, if we just take a look at the 15, we even had a 15 type 1 bearish as well. And we do have the markets just moving overall lower, but what's the most recent context? That 15-minute candle put in this really strong bullish wick in, right? Even the previous 30-minute also closed with a bullish wick. So now we need to see market structure wise in the higher time frame. Why is this wick being put in? And if we zoom out to the 1 hour, the 1 hour was actually seeing its own separate market structure shift, right? We had a low, high, trending lower, and then we started just breaking these highs, trending higher. So now we kind of have a nice bullish momentum right here. And then price pull back into these areas of interest where if we take a Fibonacci retracement from up here to down here, we're actually trading in a discount. So I was looking to short within a discount range, which was realistically is not like the best idea, right? And like I said, trading after 7 is going to definitely save a lot of these issues for me. just getting in too early or trying to attempt to predict this market move because if we take a look at this, how this 4 hour candle closed, we did close type one bearish. And I'm pretty sure if I waited till after 7, there would have been some sort of entry for me to potentially take this either back to the downside or continue higher. But just waiting for those candle closures allows for me to align up more confirmation. So daily did previously close bearish as well. So with that being said, that was the second trade that I took on the month. Give me 1 second. All right, continuing on the third trade, January 7th. Look at this one. This one, I was looking for a continuation higher. Obviously, the trend was up, right? We're in an uptrend. I considered this a type 3, but there was no closure above these levels, which was terrible, really terrible. But if we take a look at the context of this bullish uptrend, right? Where are we trending up to? We are trading up into a range. So if I really wanted to see continuations of upside, I ideally should have waited for the larger time frames to really close above this level, above this area of interest to really solidify in the markets that look, these candles are really showing some bullish momentum. Instead, we immediately reject, and I took this trade right at market open, which I never do. Terrible, very terrible. And if we take a look at this 4 hour, we're also very much ranging as well. Like, yes, we did have this previous candle close, but how is price going to react when we tap into these levels? And obviously, to bearish, even here on the 1 hour as well. 30-minute as well. We didn't have a close bullish, but guess what? Above this level, we're not going anywhere. And this level came out of the 4 hour. And I believe the 1 hour as well, right? Yeah, the 1 hour as well. So this one, yeah, like just identifying what is the market condition. Like, yeah, we had this really strong move up, but price is doing what over the last 24 hours? We're consolidating within this range. So if that's the case, why am I trying to buy it, anticipate buys? Like I'm sure this previous candle close was, if you ignore this bearish candle close, yeah, we did have a bunch of candle close bullish, but do I really want to be buying bullish in anticipation of a breakout at the top of a range, or would I rather be bullish on the pullback? And so these are things that I need to take into consideration. There was not really, I didn't give any type ones or type twos because realistically, I was not following my plan. Not just overall a really terrible trade. This one was on gold. Again, taken before 10 o'clock. This one was taken at 9:41, which means that I didn't even wait for the 15-minute candle to close. I should really put 6:41 because I traded West Coast time. So I said bullish type 3 shift, but inside an area of resistance, larger time frame was heavily overextended, did not stack up the time frame. So let's take a look. I see where this shift happened. I do see that the 15-minute is It does have a type one bearish close, but take a look at the market context, right? We're overextended into an area of resistance. So why should I look to take buys if price hasn't shown acceptance above this level? And see, these are things that happen when you just rush into trades and you don't align your time frames, right? This terrible. Like I knew the market structure was now approaching an area of resistance with an overextended buying pressure. Yeah, I still wanted to attempt longs right at the tippy top. There was no pullback. There was no nothing. And that was my mistake. And we had a nice rejection of these highs, in which if I had attempted to fade, it would have actually yielded such a nice risk reward, but didn't do that. Taking a look at here, it even looks like a type two or type one bearish on the 5 or type three bearish on the 5 minute. We have an overextended move. We pull back, attempt to push higher, stopping out these short-term sellers, but also triggering breakout buyers and then pulling back lower. This is the type three bearish shift, right? If it's happening on the larger time frame, then you can expect that to have way more weight than the one that happens on the 1 minute. But again, taken pre 7 o'clock, that means not as much confluence, probably before 9:45 as well. So it's all of these things really do affect my trading. So the patience and the ability to just wait till after 7 has really helped me a lot. And so I'm going to be looking to continue to do that. And by next month, you will all see the fruits of my labor. Okay, not my labor, but the fruits of just waiting, being patient, right? Okay, we have a winning trade here. Had a pullback into an area of interest, really waited for price to just shift and then attempted to move lower. And guess what? We had an area of interest. We waited for price to really close below to solidify that this area was going to be an area of rejection, right? Taking a look across all these time frames, we were just seeing overall very bearish momentum, which is great, right? Very great, very great. I'm looking for a continuation in downside. And yeah, another great trade. But I really want to go over my winning trades. I want to go over the ones that have really taught me the most. Okay, let's take a look at this one. This one I think was quite mid, and I'll go over it right now. We have a very large move up after news. We're trending and we already moved lower, completing and filling that whole move from CPI or whatever the fuck this was. I don't know. Right. So first off, fib retracement, trading at the bottom of the range, and that tells me that buyers have now stepped in. But why did I was assuming this was the type 3 shift, which it technically is, but because this is such a large shift, what I should have done is just waited for some sort of confirmation that price actually wants to reject this area of interest and then move lower. And also, I don't know why I didn't just wait for price to at least tap into this area. Like, what the fuck is this entry, bro? Like, yeah, place stops at these highs, but where's the shift? Like, where's the confirmation? Right now, it just looks like price wants to continue moving higher. Like, look at this 15-minute close, not even below this area, close above. Some people might call this demand area. Start shooting up. 5 minute as well. We had a 5 minute type one bullish with a bearish or bullish engulfing candle to continue to the upside. 30 minute as well. Not closing below, seeing just strong bullish momentum right away. Right. And guess what? If I had just been patient, I would have found an entry somewhere. Price just continues moving up. I'm sure if there was some sort of entry around this area, it would have been a higher probability trade. 15 minute close extremely bullish. 1 hour ended up flipping and then continuing lower. So the trade idea was definitely there. I knew what I wanted to see, but I just was not timing it correctly. And the timing just really comes down to really breaking down each of the higher time frames market structure, seeing where we are in that area of interest, seeing where we are in that push and pull phase, right? And so for me, it is what it is, like I can't um these are just all very painful learning lessons that I should have just worked on, but it is what it is. My type 3 bearish structure, but why did it not work? Right? It was because price had already pulled back and held around these lows right here, in which buyers definitely defended. 15-minute had a nice strong bullish close. So this one, my learning was nice type 3 in area of resistance. 15-minute overall momentum was bullish. 4 hour close bullish. Damn. 1 hour bullish as well. Damn. Let's see what the time. Oh, it was at least after 7, which was great. 7:15, nice. So I understand why I would have taken this trade short, right? Taking a look, we have just overall rangy conditions, broke these lows, but take a look at the range, right? Sure, we had a shift bearish, but we're still in that range. Especially we were at the bottom of the range, right? So if anything, that should have signified to me that look, these lows have not been taken out. In fact, only these internal lows on the 1 minute have been taken out, but these lows right here have not been. So what does that look like on the 5 minute? 5 minute, it looks a bunch of wicks, defending these wicks, not closing beyond these wicks. 15-minute, into this little area of interest right here, which held and supported, which led to feel higher, just really supporting that bullish thesis. Like, yes, we did have a very strong bearish close, but if we take a look at how strong this buying is on these wicks, it's like something to take into consideration, right? 30-minute, none of like, and then 30-minute, 1 hour, and 4 hour just all closed extremely bullish. So counter trending that one. But here's another trade. This looks exactly like the same one that we took on that first one, right? Just not timing it correctly or whatever the fuck I was doing around here. We do have a type 1 bullish, 15 and 5 minute close bullish as well, but guess what? We're in range. We're in range after a large move to the downside. So what the fuck am I doing? Like larger time frame was just not telling me that it wants to move bullish just yet. And then until we have some sort of confirmation like this previous candle, that's when I should have taken buys. But no. Yeah. So we're still in that range, not looking the best. Like when it's in a range, I understand that. I at least I am trading within the lows, but dude, it's realistically best to just avoid ranges. Like how the fuck was I supposed to know that this was gonna go higher? Oh, type 3 shit. What the fuck? What the actual fuck? I understand my bias as well because we are trading around this area of interest, right? But at that point, it's just what are the other time frame alignments? You want to see at least a 5 and 15 support you, right? Five and 15 close bullish, but guess what? That 5 minute just just close bullish, but it's still in this range. 15-minute actually even closed bullish, but guess what? It's still in this range. Until price really closed strong above that, that should have been confirmation to be like, okay, look, now we can look to take some buys because we have solidified market data in the markets telling us that we want to continue higher. And this was the last and final trade of the day. Ended up catching the direction correctly on gold and just rode this one up. Very nice. You see a very clear shift, right? We now have broken above these highs. You see where my first entry was. Not this one. This one, I believe, was the short. Yeah, this was the short. We have a really clear break above these highs now. Price pull back, and then we wait for price to create some sort of mini type three, in which we do get, and volume just shoots up in our favor. See, that's the timing that I need to continue to focus on. I don't want to be sitting in chop. If price is looking choppy predeterminedly, assume that it's going to continue chopping unless price really shows us, solidifies to us on larger time frames that it wants to continue higher. And guess what? I guarantee you we have good confirmation. 5 minute type one. Nice. 5 minute type one after breaking these highs market structure wise. Very good. Very, very nice alignment. 15 minute. Extremely bullish. Yes, previous candle 15 minute did close bearish, but guess what? That this candle right here, strong bullish, really breaking us out of that range, you know? So apologies. Sometimes Notion is just 30 minute wicks, a very strong lower wicks to move to the upside, like 1 hour bullish, like following the trend. I understand we are in a higher time frame area of interest here now, right? But this this means if we're trading at a higher time frame area of interest, it doesn't mean that I can't take longs. It does mean lower probability in a way, but that means that the 4 hour would need to see some sort of strong rejection, especially if these levels are coming from the higher time frame, right? But if the short term and medium time frame are still telling me that longs are in the market, you better be damn well following that trend until the market tells you otherwise, But definitely lower probability longs for sure, just because we were looking a little overextended, as you guys can see, just moving straight up. But actually, I take it back. We did have a push and a pull, right? We did see the 4 hour have a push and a pull type of market. Same with the 1 hour. So the fact that every time price pulled back and failed to break any of the lows just showed that it's still bound to move higher. Let's take a look at this trade. This one, I feel like this one was an inevitable trade. Was looking for continuation downwards. We were trending lower, got that type 3 shift, right? We were kind of ranging here. We took out these internal highs, broke lows with volume, attempted it back on the retracement, and then was looking for a continuation lower. 5 minute close bearish. 15 minute close bearish as well, closing below these lows. I guess my mistake could have been just trading in the premium of this area of interest. We also already had a pretty strong move to the downside. Maybe if price instead the 15 minute close like right here bearish and then pull back for a move lower, that would have been a better setup. As you can see, the move that I was looking for was to retest these lows, but it seems as if like price has almost hit that area of interest, and so that could have been a reason for buyers to step in. Yeah, I mean, I honestly can't really see anything wrong with this trade. If anyone watching does see something, then please let me know. Price did kind of break these highs, made a low, rejected these highs. This could be potentially like this area of interest for price to move higher since we I don't know. This one was kind of a tricky one. Maybe okay, so let's actually break it down. Markets overall rangy, right? Price previously closed 1 hour bearish, closing bearish right here. Put in a wick, attempted to move lower. 4 hour, found it. 4 hour. Take a look at this 4 hour, trending bullish, right? If we pull back and we held these lows, price was bound to move higher in the higher time frame, unless we got a really strong closure below, which we did not. So I think for me, just taking a look here, as price is just, creating these highs. We did have a fat wick right here, but we closed and created a higher low. Maybe this could have been a sign for me to maybe avoid taking sells and continue taking buys. it is what it is. Market structure was trending bullish there. 1 hour, I would say also trending bullish. You had a bearish move to the downside, but then immediately got back, bought back up, holding in this range right here. 30-minute, looking pretty rangy as well. So take sells around these highs, maybe look to take some buys around these lows. This is obviously all in hindsight, but I am just thinking if the 30-minute is looking rangy, then maybe this should have been an area where I focus more on longs before price pulling back up and then rejecting, right? So who knows? That's that lesson. And then this was the last lesson that was provided for us. I remember this trade. Okay, took longs on gold right here. Issue here was, we were trending higher, but then as price was trending into this area of interest right here, guess what? We made a high, we took out these lows, put a lower high, took out these lows, and then we were seeing a shift to potentially move higher, but price never closed above these highs. And so that was kind of my mistake, just not seeing the range. Right. There's very clear signs of selling pressure around this area of interest, which I did even have marked down on my journal that this was clear selling pressure. We did see a 15-minute bullish candle close, but it wasn't a candle close that was even above these wicks. And if we take a look as well in the 1 minute, nothing was really showing conviction that buyers were going to be present around this area. The idea is to stop out all of the sellers that are above here first and then wait for price to pull back and then look for the continuation move to the upside. And also just taking a look at that price action as I got my entry, it just started dying. Volume died. Buyers were not showing any presence and then immediately took dumps and sold. So that's on me. Pullbacks would have been taking longs right around here would have made a lot more sense, in which they did. There was potential to take longs. 30-minute actually just continued moving extremely bearish down into this area of interest, which did hold in. Yeah. 4 hour currently moving higher, rejected this area of interest, price pullback. So this was, yeah, even on this area, like previous close strong bullish, but immediately rejected. I'm glad I did wait until after 7, however. So, but taking a look at where I got my entry, you would think that after a close bullish like this, you would want to see a larger wick back to the downside, and which we did. That's just the way it is. And that was a lesson for that one. And then rest of the week just had pretty solid entries, just waited patiently for candle closes, really try to align them, and that just really helped. So yeah, like a type 3 bearish here, closing below an area of interest right here, strong close. 15-minute had a rejection wick, 5-minute close bearish as well. Price looked like it was about to move higher and tap me out, but we immediately rejected. We also had the 30-minute candle close. 1 hour was already seeing a lot of bearish volume coming in, 4 hour and daily. So overall ended the month very strong, but that's pretty much going to be the trade review for January. Just wanted to review over the lessons that were provided for me from the market. We'll go ahead and take all of these lessons and move on forward with February. It's going to be a very prosperous month. I'm very excited to see where the markets or what markets and what conditions are going to be presented and how well I adapt to them. Just really focused on getting better and just improving at least 1% a day, seeing what I can take. And yeah, overall, that's pretty much the end of the trading session or trading review.